You were listening to chartingwealth.com for Thursday, the 5th of May, 2016. We always start with IYY. That's the iShares Dow Jones U.S. Total Market Index Fund. We always start on the 2-day chart. We want to see what the market's doing on our long-term chart. The market, my friends, is going down. It was down about 0.5% for the day. I'm sorry, actually 0.60% for the day. So we had the crossover going down back on the 28th of April, and we have continued to see the market move down on our 2-day chart. We have wicks at the bottom of our last two 2-day candles, strong down wicks, down movement. We had the market throughout the course of the day. We're going now to our half-day or 4-hour chart. Lots of down movement in the morning, followed by down movement in the afternoon. The derivative oscillator continues, of course, to be negative, and we continue to have quite a divergence between the MACD and the signal line on our short chart as well as our large chart. So markets are in a down move overall. And we're going to go back to our 2-day chart. We're going to take a look at the S&P 500 as represented by SPY. It, too, is in a strong down move. Those of you who are watching by video, you can see me redrawing our trend line to connect the two 2-day candles from the 2nd and the 4th of May. Again, the S&P 500 looks somewhat similar to the IYY. We have down movement on both of those. Crossover on the 28th on the S&P 500. Derivative oscillators in the negative for the last two 2-day candles. The S&P 500 down 0.56% for the day. If we look at our 4-hour chart, we can see that up movement at the end of Monday on the 3rd, that would have been Tuesday on the 3rd, was followed by strong down movement in the morning on the 4th and down movement in the afternoon on the 4th. We've got that trend line. We're well below it, and the MACD and the derivative oscillator, the MACD and the signal line are diverging, derivative oscillators in the negative. So we have continued strong down movement. Now the last index we're going to look at is the Qs. That was down 0.64% for the day. We've seen the Qs trudging down a whole lot more than the total market, the S&P 500. We have 5 big, strong down candles on the Qs. It crossed over going down, not back on the 28th like the other two charts, but back on the 22nd. We had a crossover showing up actually on the 26th. Derivative oscillator flipped over about the same time. Strong down movement, down candles with bottom wicks on all of them, but the first one back on the 22nd. So strong down moves, very strong down moves on the Qs, which is, of course, the NASDAQ 100, our technology stocks. On the 4-hour chart, we see movement down in the morning and the afternoon. Again, everything is in the negative. Derivative oscillators lost a good bit of its energy since the big strong down moves back on the 25th. But again, we have confirmed down moves on all 3 of our indexes and all of our charts, both the short chart and the long chart. For the record, the NASDAQ 100 crossed over going down back on the 19th on the short chart. Now, lastly, we're going to range back out to our 2-day chart. We're going to take a look at gold. Gold was down for the day, 0.62%. Very interesting what gold is up to. It crossed over going up back on the 2nd. Derivative oscillator crossed over on the 28th, but on the 2nd of May, big strong up movement, and that's been somewhat tempered over the last candle. Now, we have an open red box. We have drawn a trend line. We've not crossed over going down yet on that 4-hour chart. Still in a confirmed up move, but if we look, we can see on the 4-hour chart that the gold market topped on the 2nd of May, then ran sideways for another day or so, and then has moved down sharply the last 3 4-hour candles, still above the 2-day trend line, but maybe we will see a pullback in gold that'll cross over going down, and perhaps we'll see gold roll back over and move up. so that we can find a point to jump into that up movement on gold. We always want to see that rollback and then have the market turn around and go in the direction of the large chart. So we'll be watching for that. That is where we have been throughout the course of the day on the 4th as we get ready to go on that other side of the week, go into Thursday the 5th. We thank you so much for being with us. We love to hear from you on Facebook, Twitter, Instagram, YouTube, you name it. We try to be there for you. Go to chartingwealth.com, sign up for our daily newsletter. With that, you will receive our absolutely for free How to Read a Stock Chart video link, plus you'll get the layout that we use at freestockcharts.com. We love to hear from you. Thanks so much for joining us from chartingwealth.com.